Hello and welcome to the Upgrade the World podcast. I'm your host Josh, and in this episode I'll be talking about Spot Bitcoin ETFs. Unnamed sources said the SEC set a December 29th deadline for hopeful Bitcoin ETF issuers to submit final updates to their filings to be part of the first wave of potential Spot Bitcoin ETF approvals in early January. There were a flurry of amendments from asset managers in the weeks leading up to this past week, as Monday, January 8th, had multiple firms submitting amendments to lower their fees to stay competitive. On Tuesday, January 9th, the official X account for the Securities and Exchange Commission posted, quote, "Today the SEC grants approval for Bitcoin ETFs for listing on all registered national securities exchanges. The approved Bitcoin ETFs will be subject to ongoing surveillance and compliance measures to ensure continued investor protection." End quote. The post also had an image of SEC Chair Gary Gensler with a signed quote from him that said, "Today's approval enhances market transparency and provides investors with efficient access to digital asset investments within a regulated framework." However, after that post, Chair Gensler posted on his personal account saying the @SEC Gov account had been hacked and the post was unauthorized. The unauthorized post stayed up for about 30 minutes before being deleted, which was plenty of time for some influencers and news outlets to report the SEC granting approval. Following these events, the X-Safety team tweeted, quote, "We can confirm the account @SEC.gov was compromised and we have completed a preliminary investigation. Based on our investigation, the compromise was not due to any breach of X's systems, but rather due to an unidentified individual obtaining control over a phone number associated with the @SEC.gov account through a third party. We can also confirm that the account did not have two-factor authentication enabled at the time the account was compromised. We encourage all users to enable this extra layer of security." End quote. The price of Bitcoin shot up to almost $48,000 and then quickly fell to below $46,000. According to data from CoinGlass, over $50 million in leveraged derivatives trading positions were wiped out within an hour. Back in episode 19, I mentioned the date to watch was January 10th, 2024, and on that day, 15 years to the day the first ever Bitcoin tweet where Hal Finney said he was running Bitcoin was posted, the Securities and Exchange Commission approved 11 Spot Bitcoin ETFs from the following providers: Bitwise, Grayscale, Hashdex, BlackRock, Valkyrie, BZX, Invesco, VanEck, WisdomTree, Fidelity, and Franklin Templeton. Approval of a Spot Bitcoin ETF is a major milestone for crypto, bringing legitimacy and allowing institutional and retail investors exposure to the best-performing asset of the last decade without them having to understand how Bitcoin works, how to buy it, or how to store it. The ETF launches last Thursday pushed the Bitcoin price to $49,000, its highest level since December 2021, before it dropped the next day to $43,000. Reuters reported that the U.S.-listed Bitcoin ETFs saw $4.6 billion in trading volume in the first day of trading, and the Wall Street Journal said Bitcoin ETFs drew $655 million in net inflows on their first day. The Block reported the ETFs took in almost $1.5 billion in new capital over the first 2 days of trading. 2024 is already off to a wild start, and I can't wait to see where this is all headed. That's all for this episode. Thanks for listening, and until next time, keep upgrading.